I'm Joe Dickerson with the Joe Dickerson Group at Keller Williams Realty. Wanted to show off some market stats that I've been reviewing, I've been making these videos somewhat regularly since the pandemic started, or since we went into shelter in place, really, back in March of this year, 2020. Things have changed a lot, and kind of in unexpected ways. So I just wanted to show the raw data and some insights and why I think it's important. The first is this is the average list price, average sales price, and the percent over back since 2003. So you can see the Great Recession happening here, and then the steady trend upwards since the bottom in 2009. And then you see the blue and red lines diverging. That's the average sales price in blue and the average list price in red. And you can see how they kind of split apart as time went on. And now we're seeing a pretty crazy split at 18.32% over asking is what is average. And this is from Oakland data only, this particular graph. And for the first time ever in Oakland, the average sales price is over $1.1 million. That's actually the first quarter, Q4 of 2020, that it's been over $1 million. So it's a huge jump since Q3. Let's see if I can hone in on that. There it is, which was $950,000. So that's, 15% or so increase in average sales price just from Q3 2020 to Q4 2020. Of course, it's November, the 18th today, so we're only halfway through the third quarter, but still, that's a pretty remarkable number. And this here is the same data, but a tighter timeline just from the run-up in housing prices since 2012. Kind of see the same trend there, a separation of list price and sales price. And then down here, you can see the percent over asking on average in Oakland back since 2003. So we are at a record high divergence of list price to sales price at 18.32% so far this quarter. And that was after a cooling, or not even a cooling trend, but a more transparent trend since shelter in place went into effect. It seemed like houses were going to be listed more transparently, closer to the actual market value. And that happened for a few months. And then obviously that's very much changed in the fourth quarter of 2020. And let's see, I also wanted to show this one here. Okay, so this is the new inventory coming on the market. In this case, we're looking at both Oakland and Berkeley. And this shows in red here, you've got new inventory in actual units coming on the market since February of this year, of 2020. And then the blue line is the 3-year average for that same period. So you can see shelter in place went into effect and we lost about half of our inventory. And then we slowly came back to average levels in June. And then since then, except for the Labor Day period, we've been well above average, roughly 40%. Here's all the numbers for every 2-week period or half-month period. So yeah, we've been above 40% most 2-week periods back since August 1st or so. So year to date, or rather February 15th, 2020 to date, we are seeing 9% more inventory than normal. So there's a lot of reasons for all this data. The skyrocketing sales prices is, we feel, based on talking to our clients as well as the data, caused by incredibly low interest rates, record low interest rates. We're now commonly below 3% for normal interest rates. Both conventional and jumbo, though, with decent credits, ends up below 3%. So the cost to borrow money is so cheap that it's invigorating demand, even in this weird pandemic world we're in. So that's number one. Number two is we're seeing a lot of movement out of apartment buildings, especially larger complexes, to units with more space for a few practical reasons. One is for that work at home office or homeschooling room, as well as a desire for more outdoor space. So that we can, when we're trapped inside our houses all day, we got a little bit more space to enjoy each other a little bit more without driving each other crazy. So that's number two. And then the third factor, the third factor. Let's see, I lost my train of thought on the third factor there. Regarding so more inventory on the market. So yeah, we lost a lot of inventory early in the spring, and now we're seeing it come back and surpass normal levels. And again, that's kind of for the same reason, as people are moving out of smaller houses into bigger houses, but people are moving out of apartments into those same smaller houses. So we're seeing a lot of movement in the market. I remember where I was going. So the economic realities are that our home buying demographic in the Bay Area in particular is not largely affected by this pandemic. And that's just the reality of the situation, is that the layoffs and job loss tends to affect younger people and people in hospitality and people generally earning lower wages, which in our really high-priced markets are generally not home buyers. So that's the reality. So therefore, our home buyers are still in full force. We haven't lost a significant amount of demand. In fact, we've probably seen more because of the people's desire to make moves for more space. All right, that is what I had to point out. I'm Joe Dickerson with the Joe Dickerson Group at Keller Williams in the East Bay. Thank you so much.